I will hastily move on now to our next speaker, which is Thierry Philipponnat, the Secretary-General of Finance Watch. Thierry.
Thank you, Madam Chair. It's an honor for me to be here today in this hearing. The question here is whether, from our point of view, including financial services in TTIP will enable the EU and the US to develop more financial services for the benefit of the economy and to regulate those services in a coherent and coordinated manner. TTIP is a free trade agreement, and I will not question today the assumption that more financial services will be beneficial for the economy, even though a lot could be said about this. I will concentrate instead on the question of knowing whether the inclusion of financial services in TTIP would improve regulatory convergence. Three factors from our standpoint are necessary to achieve regulatory convergence. First factor is that regulation should be developed with the belief that its purpose is to serve the public interest, and that policymakers have a duty of putting public interest above all interests, including, when need be, when public interest contradicts some private interests. Second factor is that in a world of capital mobility and of financial actors thinking and acting globally, regulatory convergence must also think and act globally. This is essential if policymakers do not want to create distortions, regulatory arbitrage, and unlevel playing fields. Third factor is that there can be no meaningful regulatory convergence without supervisory convergence as well. So, will TTIP help us reach those three factors? Let's take them one by one again. First factor, will TTIP respect the hierarchy of interest between public interest and private interest? In order to answer that question, I've looked at the only, leaked document that has gone out about TTIP, which is the mandate, TTIP mandate that was leaked in June 2013. And when I read point 15 of that mandate, which speaks about reaching the highest level of liberalization, and it's point 27 that says that the agreement shall be binding on all regulators, I have to say that on that first factor I have some very strong doubt. And if I link this to point 22 of the mandate, which introduces ISDS, we know what we're talking about in TTIP, I know that linking the two, the answer to my first question seems to be no. Second factor, will TTIP introduce a multilateral mechanism for regulatory convergence? The answer to this question is, I'm sorry, I know there's going to be a debate, but no, as TTIP is by construction bilateral. This negative answer has far-reaching consequences in my view. A bilateral system of regulatory convergence will weaken the FSB, the BCBS, IOSCO, when we should be working on strengthening those institutions. Let me illustrate my point. How can we expect FSB, BCBS, IOSCO to deliver on their mission if their US and EU members are bound tomorrow by TTIP rules, while their non-US, non-EU members will not be? Third factor, will TTIP contribute to achieve supervisory convergence? Well, I hate to say it, the answer is also no, because TTIP, correct me if I'm wrong, someone, doesn't seem to be about supervisory convergence, and it's out of scope for TTIP. I would like to highlight 2 points before I conclude. There is great fear out there that the inclusion of financial services in TTIP would have the effect of feeding a race to the bottom in financial regulation. For instance, looking into the future, points 15 and 27 of the mandate that I referred to earlier would constrain regulators and policymakers in their ability to come up with the rules they deem necessary. This is the so-called regulatory chill. This situation would be made even worse if an ISDS mechanism is included in TTIP, but it is important to understand that it would still exist if ISDS were to be dropped from the TTIP agreement. I will have a brief conclusion about the lack of transparency of the TTIP negotiation process. We have heard the accusations of speculation and fear-mongering made against the voices that raise legitimate concerns and questions about TTIP. On this issue, I would like to ask a simple question. Isn't the best way of avoiding supposed speculation to have a transparent process where all the interested parties would be able to follow and understand the detail of the agreement emerging? You do not fight fear with darkness. You fight fear by shedding light. This debate is about two basic principles of democracy. Public interest should prevail over private interest. The rule-making process should be transparent. I would suggest that we make sure that we do not lose sight of those two principles in these debates.